Good afternoon, everyone. My name is Jeanmonod, Regional VP Sales here. I almost forgot sales here at Angel Oak Mortgage Solutions. So happy Thursday and a day after Valentine's Day. So hopefully everyone had a great day yesterday. We're going to get started here in about another minute. We're going to let people log in and then we're going to get started. Just to give you a little agenda today. Today we're going to cover all our programs. So we've had a lot of enhancements over the last couple of weeks. So we're gonna go through the highlights a little quicker, maybe. So the only thing that's maybe gonna slow us down is the questions that you ask through the queue. So keep them coming through the queue, and we'll hopefully get to all your answers to all your questions today. And if we don't, a recorded version of this will be sent out before end of day tomorrow. And we will make sure that if we don't get to all your great questions, we will make sure that your AE will reach out to you directly and answer your questions. So still people logging in. So we'll get started here in about 30 seconds. Really, over the last couple of weeks, I'll just share, I really feel good about activity. So hopefully you are all feeling that too. And I think, you know, the Mortgage Bankers Association was projected about a 20% increase in originations. I think they're pretty much on point. If not, I think we might be able to get more than that as an industry. So, and I think a lot will do with the hard work that we're doing here today and what you guys have been doing over the last year. So hopefully a lot of that will pay off. So, all right, let's get started here. I've got my two subject matter experts, and I'm lucky enough to work with them both day in and day out. So we'll start with Christy, Razwick-Best. She's down in our San Antonio market. Christy, please introduce yourself.
Yes, the long name. I'm Christy Best. I have been with Angel Oak for 3 years now, and I cover the San Antonio area.
Yeah, and Christy does a great job for us. She's way more experienced than her tenure here at Angel Oak. So if you're one of her brokers on this call, user, she's got a great mind for marketing. So Gerry, please introduce yourself.
Hey, good afternoon, JJ. My name is Gerry Calderon, and I'm the local account executive in the Tampa Bay area. I've been with Angel Oak now going on 7.5 years, and I'm super excited for today. Hopefully, we can make some of you guys some non-QM experts.
Yeah, thank you, Gerry. Took the words right out of my mouth. So, you know, we're doing just to plug, we're doing a webinar next Thursday also, and we're doing it for the next 2 Thursdays that they're scheduled. So if you're not registered for those, please register on our website to attend those 2 webinars. I apologize for that. So yeah, Gerry, thanks. And Gerry does a great job representing our Angel Oak brand day in and day out. So before we get into the highlights of all of our programs, I just want to make one quick housekeeping rule. This is being recorded. We will get a copy of this recorded out to you before end of day tomorrow. We want to keep this interactive. We've got a lot to cover today. So like I said earlier, the only thing that's going to slow us down are the questions coming through the queue to make sure we answer all of those. So before we get into our most popular program, we're going to launch a poll question here. Who in the last 12 months has originated and closed a non-QM loan? So I'm anxious to see the results here. And like I said, the Mortgage Bankers Association is looking for a 20%, 21% increase over 2023 originations. And I think in the non-QM world, we're going to expect a lot more than that. So, all right. Wow. So we have okay. So thank you all for voting. Looks like we've got 53% of you on this call have not originated a non-QM loan in the last 12 months. And that's a pretty significant increase. We've seen over the last year, the average has been about 70 have not and 30 have. So without further ado, everything we're going to do here today is from our website. So we're going to kick off with Gerry's going to jump into our bank statement loan. Gerry, go ahead.
Thanks, John. So our bank statement loan, as you mentioned, is our most popular program that we have here at Angel Oak. It's for that self-employed borrower who obviously cannot prove their income. We can do up to $3 million on this program, and the minimum loan amount for the program is $150,000. We can either do 12 or 24 months business or personal bank statements for the program. There is a 2-year seasoning for foreclosure, short sale, bankruptcy, or in deed lieu. We do have nothing but fixed rates on all of our programs. So it is a 30-year fixed program that we offer on the bank statement program. We can do 1 year self-employment on this program, which we just added this a couple weeks back. So that's huge. A lot of people have been asking for that. We can now do that borrower that only has 1 year self-employment. We can now do the loan. They do require for the 1 year bank statement program to have a minimum 720 credit score. The max LTV is 80% for a purchase rate and term and 75% for a cash out. And they do have to have been in that line of work for a minimum of 2 years. We also on this program can do close under an LLC, as we can do on all of our loan programs. So do keep that in mind. As far as the income calculations for the program, the borrower can own as little as 50% of the business, or 25% if we're doing personal bank statement. We can always do purchase, cash out, rate and term refinance, owner occupied second home, or non-owner occupied on this program. We do have a 1099 option available that we can also do. And we also have a profit and loss statement that our program that we can do in the bank statement loan. We do offer 40-year interest only on this program, so that's a huge plus for your borrowers. The minimum expense factor that we'll go to is 50%. Okay, so all loans will automatically have a 50% minimum haircut, as we like to say. Okay, now we will utilize the actual borrower's percentage of expenses, provided we get a third-party CPA letter letting us know what their minimum expenses are. So if we get a CPA letter and the CPA letter states that the borrower's expenses are only 30% of the gross revenue, now we can actually use 70% of those deposits versus 50% of those deposits. It's as simple as that. We're looking at total deposits over that 12 or 24 month period of time. Loan amounts greater than 1.5 million on this program, we will require a second appraisal. That actually goes for all of our loan programs. And we do also allow on this program non-permanent res. That's also another enhancement that we've rolled out here within the last few months.
Yeah, Gerry, great job. I think the big thing is, and Christy always does this, and I'll let Christy tell us how many self-employed borrowers there are compared to VA borrowers, because you were the first one that ever shared that fact with me. So go ahead.
Yeah, I mean, I think that just speaks to the volume of it, John, is that there are actually more self-employed borrowers in the United States than there are VA borrowers. And obviously, VA is a big market that a lot of loan officers like to tackle. And so I think it's important for them to recognize the opportunity with the self-employed.
Yeah, and Christy, that opportunities continue to grow, because if you really look at, and I've got these stats here, and again, this is being recorded, so this will be part of the recording that goes out. In 2020, new business applications grew by over 24% over 2019, which was the largest increase since they started recognizing new business formations. And that grew by 23% in 2021, and it continues to grow. In fact, 2023 stats were just out, and they grew by almost 8% over 2022. I know I just threw out a lot of numbers, but that giga borrower is not slowing down, right? Mm-hmm. That they're, and Gerry, so this comes to maybe one of the first questions we can ask is, what if the spouse is W-2 to that self-employed borrower? And then ask the second phase of that, because that's probably a question we're going to get somewhere down the road. What if that person has a side hustle? So if you don't mind answering those questions, Gerry.
Absolutely. So if the spouse has additional W-2 income, we can utilize that income. We would calculate the W-2 income just as you would in any traditional full doc loan. We would ask for the W-2 and the pay stubs, and we can utilize that in conjunction with the bank statement self-employment income from the borrower. One thing that we did not mention originally is we are going to utilize the primary wage earner's middle credit score. Mm-hmm. So that's a huge bonus that's added that we offer, is that we can actually close or utilize the primary wage earner's mid credit score.
Yeah, so Christy, Abe's asking the question for that 1 year self-employed borrower. If they were W-2 up till then, but in a different line of work, can they still qualify for that 1 year self-employed?
We really want them to be in that same line of work. Yeah. So there needs to be that longevity and that experience. So if they were working in marketing and now they're working in marketing independently, then that would make sense.
Yeah, so hopefully Abe, that helps you out. And then Gerry, John's asking, do we ever allow outside seconds to get us up to a 95% CLTV?
Unfortunately not, John. We do not allow CLTV on this program.
But Gerry, let's talk about what we will allow. So we'll go to a max 90 LTV, right, Gerry? So what about gift funds, Gerry?
Yes, absolutely. We can do gift funds on the program as long as the borrower contributes 5% of their own funds. We can absolutely use gift funds. And one thing I'd like to John like to add about this program is guys, this is going to increase your borrower's buying power by offering this program. Okay. A lot of times the borrower tries to qualify the traditional way, and they go to their broker, and their broker comes back and says, hey, look, you can qualify for 350. I don't know, most markets throughout in the area in the U.S. nowadays, 350 doesn't get you a whole lot, unfortunately. But with this program, when we take a look at the bank statements and all of the deposits that are coming through the business, they may qualify now for a $500,000 loan. Okay. One of the beautiful things about our industry is we get paid on volume. Larger loan amount, more we all get paid. So it will increase your borrower's buying power, and that is something to always keep in mind. Why not grab the W-2s, figure out what the max loan amount they could qualify for would be, and then take a look at the bank statement income and see what they would be able to qualify for.
Yeah, Gerry, that's great. And I think Gerry's being, conservative, because we've seen the purchasing power increase from that borrower, even up to 4 times as much, right? They're just taking advantage of all those tax laws in there. Christy, talk about a pre-qual, and we're going to get to, so back up here a minute. We've allocated an hour for this, guys, and the last thing we're going to cover is marketing. And right before that, we're going to cover our quick quote tools. So that's going to give us rates on some of these programs. We'll show you how to use that. But Christy, talk about the pre-qual process and who does the calculation of the income.
Yeah, I think that's one of my personal favorite and most of my brokers' personal favorite things about our bank statement program is that they don't have to calculate the income. And I don't have to calculate the income. We have a team of specialists that's going to calculate that. And the important piece with that is not just that it takes something off your plate, but that income is going to follow the loan through the process. So you know exactly what your borrower's buying power is.
Yeah, and Christy, a follow-up to that would be, so, I always kind of do the public service announcement. If you know you're meeting with a self-employed borrower, right? Why not? Yeah, go look at their tax returns. But while you're asking them to save yourself time, energy, and crisis modes, right? Get their bank statements, right? Get their bank statements, because we're going to calculate that for you. And Christy, will we calculate income and pre-qual on a TBD?
Absolutely. Yeah. I mean, that's when we prefer to do it. So before that borrower starts shopping, they know what they're shopping for.
Yeah. So Gerry, we got a couple other questions to you. That W-2 and that side hustle. For how long does that side hustle need to be in effect for? So if they're doing that self-employed side hustle while they have that W-2 job, we would require how many years or how many months, Gerry?
We require a 2-year history for the W-2 income.
Right, great. So, Christy, this time of year, I know Gerry touched on the types of transactions: purchase, refinances, cash out. Talk about, what we're seeing, especially here in Texas, because we allow, cash outs. Talk about just the cash out transaction, not only just across the country, but just seriously here for Texas too.
Well, yeah, and I think, John, you're always great about giving us statistics, and one of the things that we're seeing is the amount of credit card debt, that has gone up for people in the nation right now. And with things being as expensive as they are, I think people are recognizing maybe what good is my equity if I'm not using it or can't use it? So they're really taking advantage of using that equity to lower their overall expenses, and in some cases just cushion their cash. And like you said, we do those Texas cash outs.
Yeah, and Christy, so I did pull up my stats that
I knew you
you
would.
asked about, but the U.S. has credit card balances over $1 trillion, and everyone might say, well, why would I do a cash out? And we're going to talk about a program here in a little while about an alternative, but the average interest rate on a credit card these days is over 28%. And last year, in 2022, Americans paid $120 billion in interest in credit card fees. 120 billion. That's crazy. That's crazy. Couple other questions here. Nancy's asking, Gerry, I'll throw this question over you. Can a realtor use their commission for their down payment?
That's a great question, and they absolutely can. They absolutely can. As long as it's all in all the loan documentations, then we can absolutely use the real estate commission.
Yeah, so Nancy, you'll reach out to your account executive and or your loan officer to reach out to their account executive. And I'll throw another stat here because Christy's bullying me into stats now. So 9% of the loans we close on our bank statement for self-employed borrowers are actually realtors. Mm-hmm. So, and we'll get to the marketing part because I know that's what Christy's gonna push hard on. So, couple of other questions. Gerry, I'll throw back to you. You mentioned it here. How does our interest only work for our bank statement program, and specifically for very conscientious cash flow people?
So we have, one thing I'd like to mention also on that, John, is that we do go up to as high as 6% seller concession on the program. So do keep that in mind also when doing the loan. But we do have a 30 or 40 year interest only option on the program that we can do. It's a 10-year interest only loan that we amortize on. And that is a huge benefit that you can utilize, especially when looking to qualify the borrower with the debt to income ratio. So we do see quite a bit of interest only loans that we offer here at Angel Oak with the bank statement program.
Yeah, and Christy, Gerry brought up a good point here. We talked about LTV going up to a 90, which I think is really unique here. Give us the LTVs for second homes and for investment properties on our bank statement program.
Yeah, so on most of our programs are going to be able to, depending on score, of course, and loan amount, we're going to be able to take you to 85% on those second homes.
Yeah, and Steve, I'll answer this question because I think it might be a compliance thing, Steve, we don't do second liens in the state of Tennessee, and right now we're not doing them on primaries here in Texas. So just sorry to disappoint you, Steve. I'm guessing I don't, but I will find out for you, Steve, and we'll reach back out to you. So Christy, Gerry broke up there, but he mentioned the 6% seller concessions, right? So what did we just do across most of our programs for investment properties too? What did we just go up to?
Yeah, I mean, we were already offering an advantage on the seller concessions compared to the 2% with conventional because we had 3% allowed for a long time, but we have upped that to 6%. And in today's market, I think that's significant because we are seeing a lot of loans with seller concessions.
Yeah. And Gerry, I'll help Carla, who asked the original interest only question. She's asking, is it interest only on investment properties, or can that be on their primary?
It can also be additional on their primary, yes.
Yeah. So Carla, hopefully that helps you out too there. So, and Sherry's asking about rates. Sherry, we're going to get to our quick quote tool probably here in about 20-25 minutes. So, but hey guys, great questions. Again, this is being recorded. We will get this out to you before end of day today. But we're going to move on. Just want to share one thing. We do have two bank statement programs, right? We covered our basic bank statement program. We have another bank statement program that we call internally Elite program. It's a little bit more seasoned from bankruptcies or foreclosures. But for the most part, sometimes the rate can be slightly better, but has to be a little bit better borrower, more seasoning from that bankruptcy or foreclosure. So, again, we have a lot to cover here. I might be hoarse by the end. So, Christy, Christy's gonna cover what we call our debt service coverage ratio program. So Christy, take it away, please.
Yes, so this investor cash flow or debt service coverage ratio loan program that we have is actually our second most popular program here at Angel Oak. And this is an investment program. So this is for investment properties. I'm going to get into the details, but we have had some recent enhancements on this that I will touch on as well. Loan amounts are going to go from 100,000 to 3 million. And the great thing about these is there's no income and no employment. So of course, we're going to see a lot of self-employed borrowers with the same sort of, taking advantage of tax write-offs that are available to them, or investors that own a lot of property and again, take advantage of tax write-offs that are available to them. So in providing income can be challenging. But again, I'll say that again, because I do get surprised from those that aren't familiar with this program. No income, no employment. There's no DTI calculated on these. So what we do is we're going to qualify them based on the cash flow. So depending on if it's a purchase or a cash out, that may be directly from the 1007 or it may be from leases, but we're going to qualify it on the cash flow. And without getting too into the details, we do have 3 tiers of DSCR ratio. So we're going to have the above 1, 0.8 to 0.99, and then the 0.8 or lower, which we're going to consider a no DSCR, and that will determine your allowed LTV. We can do these on long-term and short-term rentals. We just launched the Air DNA on this, which I know is exciting for those that are working, with those short-term rentals. And we're going to just be looking for occupancy greater than 65% and a market score more than 70% on those. Closing in an LLC is very important to investors, and we can do that. The LLC needs to be set up to manage real estate. All borrowers on all members of the LLC do need to be on the loan. This is a new big one that, I don't know if everyone has experienced the same thing, but this allowance on vacant properties is big. And I see them a lot where a property is purchased, renovated, and is not yet ready for rent, and they want to get out of a hard money, but it's still vacant. So allowing it on vacant properties, again, is just finding a disconnect in the market and trying to open that up. Now, this says the borrower must own a primary residence, but another recent enhancement is that if the borrower has an existing portfolio, but they're renting, we will allow that. So that's a very recent enhancement here. As John mentioned, we now allow the 6% seller concessions as well.
Yeah, Christy, I'm just going to interrupt quickly there because you touched on it, and I just want to make sure everyone really understands is that, vacant properties, that Air DNA, those are huge enhancements. And more importantly, what Christy just mentioned there about, an exception. One thing about, Gerry's been here over 7 years, Christy's been here 3 years. Our Angel Oak account executives across this country are very seasoned. They know the loans Angel Oak likes. They really do. And 30% of the loans we close here at Angel Oak don't meet our guidelines. So, we're giving you highlights here and we're giving you guidelines here, but, Christy and Gerry, they know what's going to close here. And that's, our pull through, we don't take that lightly. Our pull through is a very high number here at Angel Oak. So, and you should take note of that because that's your referral source on the other end of your transaction. And we are keenly aware of that. Sorry, Christy, go ahead. So.
No, that's a great point, John. I always say to my brokers, they're trusting me with 2 things when they send me a loan. And one is their reputation, probably most importantly. And secondly is a portion of their paycheck. And like you said, we do take that very seriously. So it's important that our pre-quals are quality. So this does have, this interest only works a little differently than the bank statement. It's a 30-year interest only. So it's going to be interest only for the first 10 years, fully amortized for the remaining 20. Loan amounts, again, more than 1.5 million. You'll see that across the board on all of our programs will require a second appraisal. Non-warrantable condos are allowed. Non-permanent residents are allowed. These are all non-permanent residents within the last year is an enhancement. Even there's been condotels, that was an enhancement, maybe a little over a year ago. So you will see a lot of those. I get asked a lot, okay, I've been asked this question a lot. So if the DSCR comes in less than 1, the deal's dead, right? Definitely not. We have tiered options for that. Full disclosure to your borrowers, you're always going to want to make sure they understand that if it comes in lower than 1, that there could be additional funds that were required. And this, again, another enhancement that was asked for a long time is, the business purpose loans. So if you're not licensed and your company allows it, in these states, you can close these business purpose loans without being licensed there.
Yeah, so Christy, thank you. Really appreciate that. Like Christy said, this is our second most popular program, but it's moving up the charts. It's the seasoned investors that are really buying a lot of these investment properties because they actually know that the greatest way to build wealth in this country is through real estate. So, Gerry, a couple other questions that came in here. What kind of prepayment penalty are on these programs?
So we do have a standard 3-year prepay on the investor cash flow, and all of our investment programs carry a standard 3-year prepay with it. On this program, we do offer a 4-year option, which we will give them a rate reduction when they do go that route.
Yep. And then Christy, so, you mentioned this, Christy, the LLC. Give us some parameters around that LLC.
Yeah, so most importantly, it needs to be set up to manage real estate. If somebody owns a plumbing company, they can't close in that LLC. It has to state in the articles the purpose is to manage real estate. All members on the LLC do have to be on the loan, and we don't permit more than 2 borrowers on a loan. But something that's important to keep in mind with that is we don't have seasoning on the longevity of the LLC. So if the LLC was, established 24 hours ago and they're closing, they can close in that LLC as long as it meets those guidelines.
Yeah, so, and we're talking about this, and I don't know who, Steve's asking this question. We talk about this program a lot, like it's only for that seasoned investor. Gerry, is this also for a first-time investor?
So unfortunately, you do have to, like Christy said, you do have to have a primary residence unless you have a history of having investment homes. There are unique situations which we will allow a first-time home buyer to utilize this program. Let's say somebody lives in, for instance, New York, which is a high market rental area, and it probably makes sense just to rent versus owning something there, and they want to purchase a home here in Florida. We have gotten that exception many times in the past, as long as it's an investment property that they're purchasing, and we could do the loan in that direction. But typically, they do have to either own a primary residence or have had a history of having investment properties.
And Christy, you mentioned it earlier. Gerry's mentioned it earlier. We just rolled it out on this program. Seller concessions on this program?
6%.
Yeah. So guys, don't leave any money on the table. I know historically it's been 3% seller concessions. See what you can get, whether it's buy down the rate or do whatever. And then talking too much, I forgot. Oh, Gerry, another recent enhancement. Talk about gift funds.
Absolutely, yeah. We can utilize gift funds on this program. Correct. No doc loan with gift funds. And the minimum the bar has to bring is 10% of their own funds in order to do so. But we can utilize gift funds on this program.
Yeah, and I'll throw out another stat just for Christy's purposes here. So 34% of the homes in the U.S. are rental homes, and 70%, might be 73%, are actually owned by individuals. So, I think one of our account executives in the Dallas-Fort Worth, market, I'll throw out a little marketing thing here, did a search for real estate investment clubs. So think about this. If you're looking to kind of generate your own business, real estate investment clubs, and he found, I believe it was at least 10 real estate investment clubs just in the Dallas-Fort Worth market. Why wouldn't you go market yourself to that, bringing coffee and donuts for them and go tell them about that debt service coverage ratio program. So a lot of great questions coming in. So Imelda, we're going to talk about here, part of the debt service coverage ratio program is, we're going to talk about, where did it go? Oh, here it is. Sorry. Christy, touch on the foreign national just to, as a highlight here.
Yeah, and I'll go through this one briefly because really what it does is it mirrors the DSCR. But interestingly enough, I had a conversation with a broker this week that said, they closed one recently, said, I can't believe how easy these are to close. I've been turning them away for years and I'm actually mad at myself. So, don't turn these loans away because you're unfamiliar. Your account executive is going to walk you through it, hold your hand through it. But again, these are going to mirror the DSCR. No income, no employment, no credit. So we have to say that again, no income, no employment, no credit, because these borrowers don't live in the United States. So they're going to be living in a foreign country and investing in US real estate. And we're going to use that DSCR ratio to qualify. Really important to know that the DSCR ratio does need to be at least 1 on these. I don't usually see that as a challenge because the minimum down payment is 30%. And these can also close in an LLC as long as that is a US-based LLC. The 12 months reserve sometimes gets oh, that sounds like a lot, but keep in mind that's on the subject property. That's the only debt we are aware of for this borrower because there's no credit report. And then they have to have one of these eligible visas unless they're from a visa waiver country, like we do see quite a bit of them from Canada. We just need a passport for them. No gift funds are allowed on this program, though.
Yeah, but go back to what some of our A's, they just have to be sourced in season for 60 days, right? 30 in here in the U.S. So if I'm not telling people how to position their loan, but get it 60 days ahead. Hey Gerry, Gary's asking a great question here. So how many? I think Christy touched on it. Do we care how many properties that investor has financed?
We do not. We do not. We don't care how many properties they have. They could have, unlimited amount of properties. We do limit them with the amount in the DSCR and investor cash flow program. We do limit them with the amount that they can do with Angel Oak at 5. But we have gotten that exception in the past as long as it's a good borrower with strong application, then we can certainly go past that number.
Yeah, it's funny, Kelly here. Thank you, Kelly. She does belong to a few real estate investment clubs in the Dallas-Fort Worth market, and she did say this program will be a very well-received program. So thank you, Kelly. I'm going to share my contact information at the end. Let me know how that goes. I'd love to be able to share that on our next webinar that we do. So I really appreciate that. Anything else to add? Well, I will add one marketing thing about foreign nationals, right? With all this geopolitical strife across the world, I would challenge all of you to maybe market the foreign national program around large universities, right? A lot of people send their children here anyway to study abroad, and a lot of big universities, maybe that's a way to market that foreign national purchase, cash out, or refinance business there. So that's just anything else to add, Gerry or Christy?
I think just on the ICFs that they often do come in packs, like Gerry said, we'll do 5 of them, and we can do those at the same time. They can take cash out from a couple of properties and purchase additional properties. We're really good about sending those to the same underwriter and keeping it a really smooth process. So keep in mind they often come in packs. Yeah,
Christy, that's great. And if you have a database of investors, a lot of them are looking to cash out of those and looking to continue to build their portfolio. So, and that's what Christy definitely talks about, that multi-pack. It's a great way to get in deeper with that investor. So Kelly, you can use that too. We'll do cash out on the DSCR and the foreign national. So Gerry, I think we're going to cover next, Gerry, is something we just added, and a lot of questions still coming around here. So let's start with our bank statement HELOC, because out of all of the second liens that we're doing now, obviously the bank statement HELOC is probably the most popular right out of the gate.
Yeah, I mean, like you said, John, I don't know anybody that's offering a bank statement HELOC for self-employed borrowers. So I think this is a huge enhancement that we just had rolled out. We can go at minimum credit score for this program 720 and 85% LTV. The loan amount goes up to $400,000. It is a revolving line of credit, interest-only payments during the draw period. So do keep that in mind. Loan terms are from 15 to 25 years. As I mentioned earlier, we can do it as a full doc or as a business bank statement loan. Okay, so again, that self-employed borrower who's been trying to get a HELOC for many years and has all that equity in their home, now we have a solution for them. This is for owner-occupied second homes and non-owner occupied. So we can do non-owner occupied additionally on this program. It is for a U.S. citizen, and permanent resident aliens are also allowed. We do not have any restrictions on how funds can be used, so they can use the funds for whatever it is that they want to utilize them for. Like John mentioned, this program was just rolled out, and it is getting a ton of traction already. So we're super excited to have this program here at Angel Oak.
Okay, Christy, I know you were waiting for this. So another stat, right? So, just so everyone knows, 63% of the homeowners that have a mortgage less between 2.5% and 4%. 85% have less than a 6% rate. So we talked about cash outs earlier. Maybe not everyone wants to do a cash out, but this is a way for not only, like Gerry said, a full doc or a bank statement borrower to do a second lien on a second home or an investment property. Christy, anything else as far as seconds? I'm trying to gather another stat here for you, Christy. So I just want to. Yeah.
I think, just as a reminder to my Texas brokers that currently this is not available on an owner occupied in Texas, but there is an opportunity to take advantage of it on second homes and especially on non-owners if they want to take cash out to buy another property, but don't want to touch that first mortgage that's at a lower rate.
Yeah, and Gerry, will we do 12 or 24 months bank statements on this?
So we can do either 12 or 24 months bank statements on the program.
Yeah, and I think, everyone, we talk about, I'm really feeling optimistic about 2024, but, I know some people are out there, well, God, the inventory's tight. This is a way to create your own business, right? Mm-hmm. Go to your previous owners. I think this is the stat I was looking for, Christy. Since 2019, the average home across the U.S. has appreciated over 47%. So guys, go back to your databases and see people who've purchased prior to 2019 or even really up through, 2-3 years ago, depending upon what market. I know, Gerry, you're still a crazy hot market down in Tampa, St. Pete. Go back and create your own business. Go back to your database. I know, Christy, you always have, granted not on primaries here, you always have a lot of great ideas.
Appreciate that.
Yeah,
we
Gerry,
try.
What have you seen early on with this, Gerry? And again, it's only been, this hasn't even been out 2 weeks yet. So.
Well, first and foremost, it's a conversation piece, right? I mean, the more that you have to offer as a broker, the more attention that you're going to get. If you're just a VA, FHA broker, then that's all you're going to be limited to. But when you have a menu of different options that you can offer, then that's going to open many doors throughout. I'm going to tell you right now, if there's a realtor out there that you tell them you have a program for self-employed borrowers, you have a no-income program, or you have a HELOC program for self-employed borrowers, they're going to listen, regardless of whether they got their preferred broker that they normally deal with. They're going to listen. And the reason they're going to listen is because they're probably interested 90% of the times in one of these programs. So that is a great conversation piece to start off to try to build your database by talking to realtors. CPAs, additionally, are great to speak in regards to some of these programs. But if anything, they're going to get you in the door, which sometimes that is all that we need in order to generate some business.
Yeah, I like that, Gerry. Just a conversation starter. And then the second liens, why would you share that with a realtor? Well, like you said, they might want to purchase another home or an investment property instead of taking the cash out on there or doing a whole, whole term loan, but just do the HELOC second or, the closed end second. I know we've got 20 minutes left. Christy, we're going through a lot of programs here and a lot of great questions. Let's talk about our full doc. I mean, yeah, we do full doc too. So
Yeah, we do these. And again, like we said, bank statements are our #1 program. DSCR is that close second. And although this isn't the greatest percentage of what we do, it does just widen your net. It allows you opportunities to widen your net. And like we say here at Angel Oak, there are disconnects in the market, and we want to be able to fill those, when we can. So we have 2 full doc programs, although they, one has an elite attached to it as we continue to expand. This looks like Portfolio Select that you have opened up here. So the Portfolio Select is really, we say that bad things happen to good people, and oftentimes that's kind of what we see here is borrowers who just need a little bit more time to get some credit issues in the rearview mirror. These do tend to end up being 2 to 3 year loans for us, before they are able to refinance into a conventional. Minimum loan amounts $125,000. We love large loan amounts here. I don't know if we've kind of touched on that. You're going to see that we offer large loan amounts. We don't see jumbo in the same, we don't define it in the same way as conventional. We actually have rate breaks, for the larger loan amounts. So we love large loan amounts here, and you'll see that across the board. So aggressive seasoning on a foreclosure, 1 year seasoning on a foreclosure, short sale and deed in lieu, 2 year seasoning on a bankruptcy. On a Chapter 13, it could technically be discharged just a day as long as it was filed more than 2 years ago. We can do these on a purchase, cash out, and rate and term on all occupancy types. DTI up to 50%. Gift funds, are allowed on this as well, as long as the borrower has 5% of their own funds and it comes from a family member. And there is that interest-only option available here. It does have a minimum score of a 640 and max LTV to 85%. Just to clarify, it's not a 640 to 85%. That 640 is going to get you to 75, and that will tier up. But this is really for that person, again, bad things happen to good people, and allows them just a little bit more space.
Yeah, Gerry, anything to add regarding full doc at all?
The one thing about full doc income with Angel Oak is we're going to calculate full doc income the same way that you would in the traditional Fannie or Freddie way. Okay, so there's not any different as far as how we calculate the income. But like Christy said, I mean, this is for that person who just had a little mishap and is looking to get back on their feet. This is a perfect loan for them to fit into. And traditionally, we see them within a few years build their credit back up and get back into that conventional loan. And that's what this program is intended for.
Yeah, and I'll throw out 2 things here. One thing that it separates us from the Fannie Freddie world are for self-employed borrowers, right? We just rolled out a 1 year bank statement self-employed borrower, but on a full doc side, we can do a 1 year self-employed tax return as long as they've been self-employed for 2 years, where Fannie requires, I believe it's 5 or longer. I don't know. But so if you have someone who's been self-employed just greater than 2 years and you want to use their tax returns, by all means. But this is a way to go for the 1 year self-employed tax return. And then the second thing I'll bring up, and Christy brought this up, and I literally had a call 20 minutes before I came on this call, was from a loan officer. The borrower was purchasing a new home. These are real world examples. Borrower was purchasing a new home, and the wire from the closing, the payoff had to be mailed and not wired. So the payoff was slow. She's now has a 1x30 on her mortgage. Yeah. So, and we allow a 1x30 on this program. So, those are real world. Gerry's over there. I'm like, God, how does that happen? But those are actually real world problems that happen. And, like Christy says, bad stuff happens to really, really good people. And that's, that's, if you saw it on the front page of on the home page of our website, we're serving an underserved borrower. Now that borrower, that was no fault of her own, but she's going to have a 1x30 on a credit report. So, that's a perfect example of how stuff like that happens. So Christy went through. Gerry, I think hold on, let me pull up here. Gerry, just quickly cover our I-10 program, because I've seen some people have been asking about it during the chat here.
this is actually a program that we've offered it for a long time, and I see that we're getting more and more traction here recently with it. I'm definitely getting a lot more calls on this program, but the I-10 program, I mean, we go up to as high as 2.5 million with a minimum loan amount of 125. It does require a 1-year seasoning for foreclosure, short sale, or deed in lieu. It is a 2-year seasoning for bankruptcy. Can use Chapter 13 filing date just as any of our other programs. We can do this as a purchase and a cash out or rate and term on this program. Now, this program is for a primary home only, and we can only do a 1 unit on this program. Most of our other loan programs will go to as high as a 4 unit on that. So keep that in mind. Non-warrantable condos, guys, you've probably heard us say this on all of our programs, but that's huge, especially in here in the Florida market. The non-warrantable condos is a huge piece, especially with everything that Fannie and Freddie has rolled out with all the restrictions. We're seeing a ton of those, and you can do the I-10 program along with the DSCR and the bank statement and the portfolio select. You can all do non-warrantable condos. It does require a DTI to be 50% or less. It is not available in all states, so do keep that in mind. You may want to reach out, depending on what area you're in, to your local account executive in order to know if they offer the program or not.
Yeah, Gerry, you know, I'm glad you brought up non-warrantable condos and touched on it here, because I think we kind of glazed over it, and especially in that Florida market you're in, you know, we don't reduce our LTV just because it's a 90%. I mean, just because it's a non-warrantable condo, right, Gerry?
That's correct. No, there's no LTV reduction just because it is a non-warrantable condo. That's correct.
Yeah, and I think I heard one of our A's say this, and I'll verify this, and I'll make sure we send this out to you. I think someone said that if you really go look at the condos in the state of Florida, he almost threw out a statistic that almost 70% of them are non-warrantable. I don't know if you heard that before, Gerry, but I don't want to.
I wouldn't be surprised. I would not be surprised.
Okay, so yeah, so you know the market just as well as he does too. So yeah, so just think about that. Maybe that's a different way to market yourself specifically if you're in a state that has a high concentration of condos. Why not go see who's listing condos in that facility and market yourself that you have non-warrantable condos up to a 90% LTV. Sorry about that background noise. Yeah. So, Christy, we're going to move along here because we still got to cover our quick quote and our marketing portal, which are great tools at your disposal. So, Christy, give us your favorite asset qualifier.
Yeah, so, you know, this is probably, actually not probably, it definitely is a loan that we do the least amount of loans on, or the program that we do the least amount of loans on. But when it works, it works. And in fact, I've closed these for my brokers specifically, you know, so they appreciated it. And it's really designed for a borrower that could pay cash, but, you know, understands that cash is king and they want to hold on to some of their funds. So there is going to be no employment, no income, no DTI on these. We're going to be qualifying the borrower on their assets alone. Minimum loan amount is $250,000 up to $3 million. And really what we're going to be looking for on this is that the borrower has 60 months of debt coverage to close. So again, we don't do a ton of these, but we do a couple a year. And again, when it works, you're saying yes to a borrower that's been told no over and over again, which is really, you know, what we want to be able to do to increase your relationship with your referral partners. The borrowers do have to have at least $500,000 in post-closing assets, funds to close, of course, the 60 months of debt coverage plus 6 months of reserves.
Yeah, and Christy, great point. One thing, you know, we talk about exceptions. I've heard some of the Mid-Atlantic AEs say they have gotten this program done for a second home. So, and then the other thing, if you're thinking about, you know, pro athletes, right? Maybe their contract isn't greater than 2 years or 3 years, you know, maybe, but they have a lot of assets. Those are things to think about as you're doing this loan. It's and again, we're covering a lot of programs. I think that's the last one we're covering today. So, but we went over a lot of programs here, guys and girls. So, you know, what we're trying to tell you is never say no. Call your account executive, right? And so, Gerry, I think you're gonna take us through. You know, people have talked about rates. What do rates look like? What do you know? How do I get you a pre-qual? You know, and what are our turn times, Gerry? So let's go into the quick quote here, Gerry.
All right, the non-QM quick quote. That is my favorite piece of Angel Oak. I think when I interviewed with Angel Oak over 7 years ago and they showed me the non-QM quick quote, I'm in. So this is very simple, very user-friendly for you to utilize. All you have to go in and click on the non-QM quick quote. You do not need a user ID or password in order to activate this portion of our website. The first question that it's going to ask you once you go in there is to select your channel type, which is you're always going to select broker, unless you're in a non-Dell account, but typically it's broker. It's going to ask you for the lien position, as John's put there, first lien position. Your loan amount, you're always going to put in there your loan amount. If you don't have an active contract as of yet, you can just guess your loan amount or play with the loan amount in there to get in order to get the pricing, but you do have to put a loan amount in there. Minimum or the mid credit score is the next question it's going to ask you. The loan to value that you're looking to do. You always want to click on the subject state that you are doing the loan in. So if you're in Florida, you're going to click on Florida. Housing history is where you would put if they had any kind of late within the last 24 months. Okay, so there is the option for any kind of late on there. Property type, as I mentioned, we'll go to as high as 4 unit. Typically, you're going to see here the non-warrantable condo, the condo itself, and just a regular condo that also show up here under the property types. The transaction type is whether it's a purchase, cash out, rate and term, or we didn't even touch on delay financing, John, but we do offer also delay financing, and that's where you under the transaction type on here. Income documentation is where you're going to utilize all of these programs that we just discussed, whether it's the bank statement program and you're doing 24 months business bank statements, or whether it's a DSCR loan, that's where you would put under the income type. Occupancy type, owner occupied investment, second home. Borrower type, that's where you would select whether you're a citizen, permanent res. Lock duration, I would always, for pricing purposes, just leave it on 30. We do have an option to waive escrow on all of our loan programs, so do keep that in mind, and you can select that option there, and then the interest-only option shows up. There's 2 ways that we compensate you. There's borrower-paid compensation and lender-paid compensation. In today's market, I see more borrower-paid than I do lender-paid compensation. So if you just want to get the par pricing, okay, closest to 100, I would say leave it on borrower-paid compensation, okay? As you can see below, the rates in the program show up. And the cool thing about this is it's going to tell you every single program that this borrower qualifies for, not just necessarily the one that you're looking for. All right. And it does tell you the LTV that you requested for this program was 75%, but you can go to as high as 90% on the program. So you can tell your borrower, hey, you qualify for 75, but I can actually get you 90 on this program. It does give you the rate below. As you can see in this scenario, you've got the bank statement and bank statement elite rate, which the bank statement is a 7.25, the elite is a 7.5. You've got the seasoning for the bankruptcy, foreclosure, or housing events, which it'll show on there on all of our programs, whether it's 24 months, 48 months on there. And then what you're going to see off to the right is where it's going to say view rates. Once you utilize or you've seen the program and you know the borrower is on board and wants to move forward, then you're going to click under the view rates button there. Okay, you're going to select the rate that you are going to offer to the borrower at that point, and then that's going to take you to step 2 of the quick qual. Okay, once you select the option on the rate, it's going to go to take you to step 2. Now, this is where you would go once you're ready to move forward for a pre-approval. Our pre-approvals are called a quick qual. Okay. Once you're in this step 2, you can either upload your MISMO 3.4, or you can just skip and go to next and go to step 3 of the pre-qual, which is going to give you all of the loan information. Okay. Then you're going to fill out all of the general information, select your account executive, and then you're going to put in all your company information, all of the information for the borrower. And then here's where you would upload the 1003, the credit report. If it's a bank statement loan, you would upload the 12-month bank statement. Okay. We do not need a 1008. It's not necessary. If you want to upload it, great, but it's not something that's necessary. And then you also have the drop down for the bank statements. As Christy mentioned earlier, that we do the calculation for you. That's where you would drop the bank statement into. If it is a bank statement loan, there's a questionnaire that's required with it, and then you would drop the business questionnaire under the additional or the business questionnaire drop down, and then any additional documentation. For instance, a lot of times people under the foreign national will put the visa on the additional documents, or if you want to take anything else that you want to upload additionally that you want your account executive to review, you would drop on there. Okay, and then you would fill out the remainder of the credit history information. Once you fill out the credit history information, you can put in any additional comments that you would like for your account executive to view. So non-warrantable condo, looking for max LTV, whatever it is that you would like for them to know about the loan, or business bank statement loan, additionally with a co-borrower who's W-2. Anything you want to put on there, you would put under the additional comment, okay? And then once you do that, you simply hit submit, and that'll go directly to your account executive. Our account executives will turn this back over to you and pre-approve the loan to you within a 24-hour turn time. It's not same day. So do keep that in mind. And this is an actual review that is done by your account executive, that they will issue the pre-approval for you.
Yeah, Gerry, you hit on a bunch of great points there, but you know, I'm gonna toot, you know, our AE's own horn here. They are basically doing a pre-underwrite on this file. You know, they're looking at the 1003, they're looking at the credit, they're making sure all the bank statements are in there for the team to calculate. And you know, like Gerry said, you know, in most cases, you'll get that back within 24 hours. And Gerry, how long does it, we've had a couple of these questions come in, how long does it take to close a loan at Angel Oak?
So that's a great question, John. And I always say that's something that is entirely up to you. Our average turn times is 17 to 21 days. However, if we keep our touches under three touches, typically, we can close those loans in 14 to 17 days, no problem. Now, if we just have somebody that's piecemealing conditions at one time and hoping that their turn times are going to be a little bit longer, because obviously every time that we go back in for a review, it's going to be 48 to 72 hours. So we can close them in as little as 14 to 17 days, but that is something, if you and your processor work hand in hand and work directly with your account executive and their account manager, there's no reason why you shouldn't be closing these things in a 14 to 17 days time frame.
Yeah, Gerry, you just gave me goosebumps for that. I mean, you're the first AE ever on a webinar that said touches of a file, which goes to show you the quality of the work that Gerry puts into not only his pre-quals, but the hand-holding that your account executive, and Gerry does it very well, hand-holding that the account executive will do with you through this process, right? Because, you know, it's always hard using a new system if you are new to Angel Oak, right? And if you're not, then you love the system. So, but yeah, Gerry, I love that. The amount of touches is spectacular. And Gerry, you forgot though, on the quick quote, you forgot to say it's so easy what?
It's so easy. My 8-year-old loves going on there and pricing out loans. So she gets her own scenarios and goes on there to see if they qualify or not. And I've yet to been able to close the loan.
8-year-old can do it, right? So, yeah, it's and that's what we try to do here at Angel Oak. We try to make this a easy process, right? You know, these are not your traditional loans. I'm not going to sit here and say, you know, they're all easy, but we do try to make your life a lot easier. So Gerry, I love two things now I've got from you: the 8-year-old and the touches. I love that. So, you know, we've got one more section left to cover here, and I believe, you know, it's the most powerful. So let's go, Christy. So take us away.
Okay, so I want to be respectful of everyone's time, so I'm going to cover this fairly quickly, but I really encourage you to reach out to your account executive and then talk to them about our marketing materials that are available to you. Gerry mentioned the things that were his favorite when he first came on board with Angel Oak, but I think something that really impressed me from the beginning was how we invest in our relationships with our brokers by providing them with this marketing material that truly allows them to grow their non-QM business. So we have this material available for you, and it doesn't say Angel Oak on it anywhere. There's opportunities if you wanted to co-brand something, of course you could, but this is for you to use to begin growing your non-QM business. And I think, especially if you're new to this marketing material can be helpful because it really can be a cheat sheet for you, right? We're providing the marketing material for you for several reasons. One, it is a cheat sheet for you, and two, you wear a lot of hats as a loan officer. And this hopefully takes one of those off your plate by having this marketing material ready to go. So John, we'll jump into the presentations just real quick, and I promise I'll go fast.
Okay, you want to jump right there? Okay.
Yeah. Well, I think that this is just really important before we start losing people, that we'll do these presentations for you. You set up the presentation, and we'll show up and we will talk about non-QM. We're there to highlight you and what you have to offer. John has some bad jokes, and one of my favorites is that we're in the witness protection program. We're not there to talk about Angel Oak. We don't mention our brand. We're there to represent you as one of your investors. And of course, you're welcome to do these on your own. I have, a few originators that started out with me holding their hand and doing these presentations, and now they're doing them on their own. And I think that that's amazing. So this is ready for you. You're going to drag and drop your logo, your contact information. Again, it doesn't say Angel Oak, but it's going to walk you through what non-QM is as you present that to your realtors and start working to build that business. I have yet to do one of these presentations where my originator didn't walk away with a loan from his realtor that said, wait a minute, I can do this. I'm 1099, I'm self-employed. I need a no income, no employment investment program. So take advantage of these and walk out with a loan. Not only are you building that relationship, but again, building your pipeline as well.
Yeah, Christy, and you're right. Want to be respectful of everyone's time. So just so you know, one person already wrote in that they had to jump off. Yes, this will be emailed. This is recorded. This will be emailed out to you before end of day tomorrow, I promise you. But there's a couple other things. So for those that have to jump off, want to be respectful of your time. I know we covered a lot. So Christy, talk about some of the other tools that we do have for them though.
Yeah, so, another thing is obviously social media. I know I'm jumping all over for you, John, but social media is obviously an easy tool to use, an important tool to use to market to your customers. But sometimes creating that content can be challenging, right? It gets exhausting trying to create new content every day. So we've taken that, off your plate with these images are ready to go. They're sized for, whichever media you're using. And we even have verbiage there for you. You can cut and paste, download the image, upload it to your social media, cut and paste the verbiage that we have there, add your hashtags, and your social media post is done for the day. And, we have these set for Instagram, for Facebook, for LinkedIn. And our marketing team just really does a great job of keeping this material up to date for you. So if you're looking for some social media posts and you don't want to have to come up with your own content every day, you can log in here and take advantage of the social media that is here.
Yeah, Christy, I think, we talk about serving an underserved borrower, but these are very underutilized tools. Mm-hmm. And to jump on what Christy said earlier, get those realtors in a room and you will get one of their loans. Do you want to just touch on a flyer here too, Christy?
Yeah, and I think, something I advise my brokers to use the flyer for, if you are brand new, of course, lean on your account executive. We are the experts in this program and we know what you don't know, and we're going to help hold your hand through it. But this is great. Print these out. Put them on your desk, pin them up on a board next to you, and use them as a cheat sheet when you're calling out to your referral sources. They're going to ask you some pretty high level questions, and most of them are going to be able to be answered here. And these are completely customizable. Again, you can put your photo on them, your logo, your contact information. And once you you don't have to do it each time. So you put it on the bank statement loan, you save it, it's going to populate to each one of these flyers for you. So you can see a sample here of, the loan officer has their photo, their contact information, their logo. And again, this is great for dropping off at offices. The CPA one is one of my favorites. Where do you get bank statement borrowers from? Their CPA. Often they're going to say, thank you for the great job you did, Mr. or Mrs. CPA, but I can't qualify for a home loan now. What do I do? Do I need to refile my taxes? And they can refer them to you. So you can take advantage of just dropping those flyers off at local offices as well.
Yeah, Christy, I mean, everyone's going to do their taxes probably in the next 60 days. Why wouldn't you ask your CPA, hey, do you have a lot, you do great work for me and a lot of other clients, I'm sure. What about, have you ever talked to your client base about purchasing a home? Well, I write off everything. They can't. Well, it's a great way to market a different way than everyone else is trying to market. Well, everyone's trying to, swim downstream, you're swimming upstream. So I just like the idea that, Gerry, I know we're over time here. I know you do a lot of realtor presentations. Gerry, anything else to add from a marketing perspective?
No, I mean, I think Christy did a great job touching on all of it. But I will say, guys, this is something that we mentioned. It's not being utilized the way that it should. And really and truly, there's no reason why you shouldn't utilize it, because it is something that is done for you. Okay. And it's very, very simple to utilize it. Like you said, you can customize these flyers. They mention all of your information on there. It just has our loan programs on there. And the real estate realtor presentations is something that every time I've done one, there's not a time that I've left there without getting a loan. So it's something that is huge. They're something that is going to definitely help you grow your portfolio, and nothing bad's going to come out of it.
Yeah. So Gerry, anything else in closing? And we got a couple more seconds here.
Yeah, last thing I'd like to just say is one thing that we do here at Angel Oak is you got to keep in mind that a good portion of our loans are exception driven. Okay, so just because your loan may not fit in the particular scenario that you've seen from some of these programs does not mean that your borrower does not qualify. You have seasoned account executives that have been here with Angel Oak for, I think our top AEs came out this last week, and the average was over 6 years that was on that list. So you have seasoned AEs that have been here for a long period of time that know what they're doing and and they can guide your loan, structure your loan, and help you to maximize your borrower's buying potential. So don't be afraid to pick up the phone, contact your AE, even if you think this loan may not qualify. Maybe it doesn't qualify for this loan program, but possibly it will qualify for something else. So that is something that I think a lot of times gets pushed off, and we can definitely help you out.
Yeah, make you look like a superstar, right? That loan officer. So Christy, anything else in closing that you want to share?
I think Gerry said it perfectly. Really what our goal is here is to help you widen your net. And although we're expecting 2024 to be a better year, some growth from 2023, I think that it's still important that you're able to widen your net and offer more loan programs. And, I'll echo again what Gerry said, bring the scenarios our way. We want to take a look at them. There's, sometimes I have a broker say, sorry, I'm calling again. That's what we're here for, is to support you. And the more questions you ask, the more you learn and the more you'll become an expert yourself. So that would be my suggestions, allow us to help you widen your net and bring your scenarios our way so we can help guide you through becoming a non-QM pro yourself.
Yeah, thank you, Christy. I appreciate that. And you can see just by, the character of our subject matter experts here today, you won't be disappointed with any account executive here at Angel Oak. How great would it be to bring a Gerry or a Christy and have them present on your behalf about non-QM programs, not about Angel Oak, it's about you. And I'll use, I like using people who've asked a lot of questions. Carla on our question queue, they'll go in there and they'll say, hey, I work with Carla. I'm just one of her investors. So they're not saying anything about Angel Oak. And it makes, Carla, the loan officer, look fantastic that she's brought all this content. Christy said it, Gerry said it. You can ask all our other account executives that have done realtor presentations. They get loans out of them. So why not do that? So Hey guys, I know we covered a lot here today. This is recorded. If we didn't get to a lot of these great questions, your account executive will reach out to you. This recording will go out before end of day tomorrow. We are doing next Thursday, we're doing just a deep dive into the 1-year self-employed program. And then the following week, we're going to jump deeper into those second liens, because I know there was a lot of questions coming out there. But if you need an answer before that, definitely reach out to your account executive. If you don't know who your account executive is, this is a really crude way to do this. Here's my contact information. Text me or email me, and I will get you in touch with your account executive today. So on behalf of everyone here at Angel Oak Mortgage Solutions, appreciate you taking your time. I know we went over and covered a lot, but thank you so much for joining us today. And if you haven't closed the loan with us, please give us the opportunity. You can see by the 2 subject matter experts we have, they know what they're doing. So thank you very much. Have a great day, great rest of your year, and let us help you close more loans. Thank you.
Thank you.
Thank you, John.